Our next speaker is Ben Sampson from GE Ventures. He's a director in their energy practice. He's been at GE for about since 2012, I believe now, and he's focused on investing across the energy value network, as well as in smart cities and smart building applications.
Thanks, Marcus. Perfect. How's everybody doing this morning? Enjoying it. Some great discussions, some great companies. By far, the best part of my job is talking to entrepreneurs and innovators and having discussions with them on what they're working on, what problems they're trying to solve, and how they're solving them in an innovative way. And more frequently, those conversations are starting to revolve around what's your business model. And so I'm going to take a slightly different tack today. We've talked a lot about technology. I'm going to talk a little bit about business models. I'm going to talk about specifically investing in the future of energy, trends that we see from our seat in GE Ventures, and how those trends have been enabled both by technology but also by new business models. So a little bit of context, Marcus already gave it. I'm an investor within GE Ventures. GE Ventures invests up to $150 million annually across manufacturing, software, energy, IoT, and healthcare. We see many of the same trends across those industries, and it gives us a great vantage point from within the organization as well as in the external ecosystem. So at GE Ventures, we're constantly reaching across entrepreneurs, internal and external stakeholders, customers, partners, innovators, universities, all sorts of people to understand how the ecosystem is evolving and what new trends are there, and how we can help influence those and connect those within GE as well as externally. So we do that across all of the industries I outlined, but specifically today we're going to focus on energy. And within energy, this will come as no shock to anyone in this room, I don't think. We see a number of trends, sort of key trends, and I'm gonna cede Dave's digitalization and raise him digitization in terms of made-up words. But we see three major trends here, and then one sort of one that I'm particularly passionate about in mobility. But it's decarbonization, it's decentralization, it's digitalization or digitization, and then it's disruption in mobility. Those are the four big trends that we see. So I'm going to touch on each of those, sort of where they've come from, where they're going, and how they've got there, and then also talk about some of the business models that were leveraged in those instances. And then I'd ask the audience to think about sort of the convergence of some of these trends and where the opportunities are. As investors, we're always looking for either an inflection point or a convergence of trends. That's where we see the best opportunities to invest. So the first one is decarbonization. These charts are familiar to everyone now. You know, the cost and price of renewable energy has just continued to decline to continuing to be at historic levels. But one historical data point is on the right side of this chart here. In 2016, annual capacities, over 50% was generated by, was renewable energy. That's huge. That's incredible. The other interesting point on this slide to bring up is the cost of lithium-ion, of battery storage, or energy storage in general. In Excel, out in Colorado, they released some statistics in January of this year about a solicitation they did, and wind plus storage came in at 2 cents per kilowatt hour, and solar plus storage came in at about 3.5 cents per kilowatt hour. This is now competitive with dispatchable traditional fossil fuel generation. It's really incredible what this has enabled. So this is a trend that's ongoing. Now, what went into this trend in terms of business models? There was obviously technology development, right? The technology development is a business model. There were asset builders, so building these products, selling them into the existing electricity value network, to utilities, to IPPs, to large developers. This was largely driven by a technology development and asset building and scale. That was the business model that was used here. Now you'll see, as we move to the next trend, decentralization, we're leveraging the same technology that was developed as part of decarbonization, but we're bringing it to a new market in a new business model leveraging service providers. So I'll get to service providers in a second. This chart, again, no surprise to anyone, decentralized generation is growing exponentially, specifically in the residential sector, but also in C&I and all behind-the-meter applications. Now, what enabled this? It was the same technology that was developed for utility-scale storage, solar, wind, but it was a business model around providing a service, competing with your utility, which is providing you an energy service. You pay for electricity on a service-based model. Companies like SolarCity and Sunrun came into customers and said, instead of buying this capital-intense piece of equipment that I'm going to put on your roof, pay me a monthly rate that's lower than your existing electricity rate as a service, and I will provide you this, and I'll finance the equipment, and I'll take care of everything for you. And that was a business model that consumers could understand and could easily adopt, and that drove the scale of decentralization. Digitization, the fourth industrial revolution. Everybody knows what's going on here. This is actually a convergence of three trends as well: connectivity, compute power, and ubiquitous data. It's proliferating across all industries, and energy is no different here. What we're seeing with digitization in the energy space is business models around network orchestrators. So the previous two trends, decarbonization and decentralization, have turned our electricity grid from a one-way power flow, centralized generation trickling down to end devices, to now a network of energy devices that are both generating, consuming, and storing electricity. There's two-way power flow across the grid. How do you manage that? It's a much more complex network. So digital solutions are enabling that. Network orchestrator models, connecting and aggregating disparate devices across this grid are driving a lot of efficiency and a lot of value. One example in GE of digitization that we have is in our wind turbine business. We have a software product called Asset Performance Management. We use it in the wind turbine business to optimize wind turbine fleets. And so one or two wind turbines upwind of the fleet is collecting data, analyzing that data in real time, passing that information downwind of those turbines, and controlling and optimizing wind turbines in the entire fleet. And we've seen results that have improved capacity factors by up to 20%, just with software updates, essentially. In the network orchestration side of things, we have a portfolio company, Sonnen Battery, Sonnen now, previously Sonnen Battery. They sell residential energy storage, and they have a business model that allows you to participate in the Sonnen community. And you can start to look at options around peer-to-peer trading, and Sonnen coordinates all of that behind the scene. You as a consumer are just getting this service. Sonnen is using network orchestration and digital solutions to coordinate those assets and provide a better solution for you. So I do want to leave time for questions. So a couple more minutes on mobility, and this one's huge. This, again, is a convergence of a number of trends. And Alex from Electricity actually had them up there. It's electrification, it's automation, and it's connectivity, as well as shared mobility solutions. And they're all happening at the same time in mobility, and it's creating a ton of disruption. I mean, if everybody lives in Boston, I'm sure, I took an Uber this morning, I'm sure many, many people did. It's proliferating. But I'm going to focus on electrification. It's too big, mobility in general is too big of a topic to cover here. But on electrification, I'm going to show you one slide that I think really sums up both the opportunity and the challenge that's presented by electric vehicles. So on the left here, how many people remember when the California storage mandate came out? It was a big deal in storage, right? There were companies that were actually started just because of this mandate. It was a huge deal. How many people remember the Model 3 launch? Yeah, a couple people. The storage capacity associated with the pre-orders of a Model 3 were 10x that of the landmark California storage mandate. That was mind-boggling to me when I first thought about it and realized that. That's a huge opportunity. Now, the primary use of those batteries is definitely to power vehicles as transportation units. But vehicle utilization today is 3 or 4%. It's incredibly low. It's improving with some of the other trends in mobility, but it's incredibly low. And this represents a massive opportunity to tap into that. We're looking at companies with both technology and business model innovation to leverage those assets that are otherwise stranded and sitting still. The challenge. So the challenge on the EV side is that they're increasing more demand for electricity. And right now in very localized places. You talk to anyone selling EVs and they can tell you specific zip codes that are high penetration zip codes for them. If you think about a feeder, an electric feeder that has 30 houses on it, if everyone in those houses purchased an electric vehicle, using California, the duck curve as an example, if everyone purchased an electric vehicle on that feeder and came home at 6 p.m., turned on their home AC, plugged in their vehicle, you're talking about a feeder that was 30 that now looks like 90 homes, all charging vehicles, all plugged in. And that's at the worst rate. Solar's dropping off in California. It's at the worst rate. It's terrible timing for that. There's a massive opportunity here to leverage, to combat that challenge with, again, sort of network orchestration, understanding the broader network and how to leverage the assets and how to better control them to optimize this charging. I think that's it. I do want to leave it for a couple questions. I will just say, from GE Ventures, we're super excited about everything that's going on in the energy space. Massive trends already ongoing and huge potential for investment.
So let's take a couple questions. We'll see how Ben's throwing skills are.
Ben, this 150 million a year, how much is it in the energy sector, and how much is it how is it distributed in early stage or later stage, ready to deploy kind of deals?
Sure. So we are 150 million a year. We've got about 100 active portfolio companies right now. I think 30 roughly are in the energy space. So about a third of the portfolio, a little under a third. In terms of the maturity of the companies that we're investing in, we're looking at companies that are in the early commercialization stage. So quite a bit of technology risk retired, looking at execution, market risk. Generally, they've got sort of early stage revenues or visibility within 12 months to revenue, something like that.
Just your point here about the duck curve. Obviously, you can do predictive analytics and cost and charge later at night and so on. So folks clearly must be doing that, planning that.
Yeah, so people definitely are. There's companies out there that are deploying controlled charging. There are some that are looking at bidirectional charging, so vehicle to grid. The problem is that you as an EV owner are most concerned about having a full state of charge when you wake up in the morning and get into your car. And so the incentives aren't necessarily there or large enough for drivers today for them to adopt those models. And so I think there needs to be innovation around how those systems are deployed, not from a technology standpoint, but from a business model standpoint. The other thing that's going on in EV charging is multi-tenant residents that don't have access to garages or private parking. They park on street. When I lived in Boston, I parked on the street. I parked in a different place every day, and there could be a charger there in the future. There may not be, but how do you solve that problem as well?
In this future, there will be losers. Could you speak to who's on the losing side of this change?
There will be losers. I don't know if that's necessarily true. I think there will be incumbents that will have to adapt, and I think they are adapting. I think you see a lot of activity with BP and Shell and others in this space that see this coming and are trying to plan accordingly for it. So I think there are certainly organizations that are threatened by this. To say that there will definitely be losers, I think would be it's too early to say that.